Hello, this is Dave, and welcome to Equity Story. I'm here with the great Mr. Wolf, and it's just general share advice and not personal advice. And let's get going, Wolfie, because we're a little bit late at the moment on this video. And the first story I'd like to talk about is PWH, because, you know, it's still holding trend. That candle's looking a little bit ugly. It's only one day. It might come back later towards this afternoon. The charts are still saying it's okay to hold if you've got that long-term approach. Maybe if you, so from that point of view, absolutely fine. I'm bringing the performance highlights across. What do you make of PWH?
Look, the reaction is pretty strong. So minus 15% today. It could go lower, right? Because it's an expensive stock. So any disappointments, usually these stocks get punished severely. So I'm not surprised seeing that. When I first saw that thing, I thought it's probably going to get sold down a bit. So the question to me is, okay, what's the good and the bad in PWH? Because we like the story. We know that it's in the long term, it's a pretty good story. So really, if they do have something weak, it's gonna suffer. So I went through the numbers, Dave, and really, I'm not too disappointed with it. I think it's, generally speaking, it's pretty good. They give the reasons why the profit, and I think that's what probably falls down for a lot of investors. The profit was only up like 3%, and the EPS was up only 3%. And when you have a stock trading on 50 times, you'd expect more out of it, right? At least 10% plus to justify that 50 plus PE. So, okay, what are the reasons why it's actually didn't quite perform? And the reasons are pretty clear in there. So they first of all, they spent money. So CapEx was quite a big expenditure for them. And the good thing is they actually spend it out of their own cash flow, so they didn't have to, go to the pockets of investors and ask for more money to keep growing the business. So that's a good thing. Their cash flows were still positive. The top line still grew quite nicely at 15%. So that's the good news. So obviously, what are other things that cost this business? So other things that they spend money on, Dave, is cybersecurity. So they talked about that. They had to hire more people. They said the inflation is actually did hit them. So some of these things, okay, possibly it's just one of those halves, maybe even a year, that we might have a little bit of slowdown in the growth. But if you look at the long-term performance, still very, very, very good. Maybe the other thing, and just leave it on there for a sec. Yep. Maybe the other thing is they didn't give any guidance, Dave, and maybe that's one of the other reasons why it's sort of getting down 15%, and even probably maybe further.
Well, how can you give guidance in this sort of environment? It's not easy, is it?
No, it isn't. It isn't, absolutely. That's why, you've got the glass half full, glass half empty, where you're probably doing the right thing, but it'll give you guidance. But from my investor point of view, we want guidance. So it's just very difficult to make a negative or a positive case in this. But if you look at the overview performance here, it's actually not bad. You've got, like I said, the numbers at the bottom line are very weak. So you've got the EBITDAs, their profits, and so on. The dividend per share is only up 3%. But like I said, I'm not too worried, because it's just a half where they had to spend a lot of money on growing the business. I remember they talked about that they're building a big warehouse in UK, right? So there's things for them to grow. And then if you go look at the breakdown of the actual business units, they are building that other business units for growth over the next few years. So, like I said, I'm not going to condemn them for this. While it's weak, I understand. I think if you look at the chart, Dave, over the last 5 years, maybe, we have seen some big red candles from them, but eventually they'll bounce back. So, for a long-term investor, I think I'll have this on a monthly chart, Dave, for a long-term investor. If you are trading this, because it actually look like a very good chart, I have to say, and we do have some traders in this, I'd say, got to obviously go with that $10, Dave, and you're out if it goes below that, I'd say.
All right, but long term,
look at it. I mean, look at the performance half trends, right? It's still, revenues is still 19% year over year, right? Which is pretty good. Obviously this half slowed down. There's no doubt. You can see that on that. That's the thing with the bottom bits. It's has slowed down because it's just been one of those years, and we've seen it before. But the problem is trading on 50 times, and the expectations are pretty high. That's what happens. You're going to get punished if you come up with a weaker half.
All right. Okay.
But like I said, long term, I'm not too fast. because it might present an opportunity for me to buy lower. And like I said, I think the fund is in this. The fund is in around $10. So while we're back to square one almost, I'm still, while I'm disappointed, I'm not too disgusted with this. It's actually not too bad.
All right, so you've got you're sort of long term on it anyway.
Yeah, let's put it on a monthly. I just want to have a look on the monthly what it looks like, because like I said, for the longer term investors like me, look at it. I mean, it still looks decent.
Yeah, and I think that 10 should act as support on the monthly, right?
You'd think, right? So like I said, it's no panic time yet for me. Let's see what happens. Hopefully it'll bounce back with the next few weeks.
All right, let's talk about SDF, because now that's a chart I really like the look of, Wolf.
This is a trade, Dave.
All right, tell me fundamentally.
Okay, so this is another AUB. So mortgage broker in insurance. Sorry, not mortgage broker. Insurance broker, which is flying at the moment. We'll have another look at another company in the insurance space, which is going incredibly well. So upgrade today, Dave. So following Ostbrokers, AUB footsteps, they're looking very, very, very good, these companies. And if you're in this, there's probably more to come. I can't see this stopping anytime soon. So this is a trade for me. While it's expensive fundamentally at about 30 times, that's obviously going to come down with results and upgrades, but it's still expensive. And compared to AUB, it is more expensive than AUB. So preference probably goes to AUB for the moment for me as a long-term investment, but this is very, very good too. I can't have them all.
Oh, all right, and certainly Wolf. So buy under that sort of 5.75, maybe target 645, and stop loss just under trend. That's 5.16. Yeah.
Yeah, absolutely. I think that's a.
I mean, you can have a tighter stop if you want at 5.45, but maybe you could do that if you're maybe a tighter stop if you wanted under that sort of.
I think the only case I'm looking against it is the last year. It's been sort of flirting with the blue line quite a lot. So maybe.
Well, it's also this market could get very volatile over the next few months, right?
Exactly.
So okay, I think we'll definitely go for that. Good looking chart, and probably Wolf, I'd say one of the best looking charts we're going to have this week. It looks
absolutely.
It looks excellent. Now PPE.
It's in the dividend portfolio, Dave, on our website, right? So you can have a look at that. It's one of the smaller, riskier dividend, but delivered again today. Reiterating guidance, nice profits. I think 40% growth overall. We've got Australian market, the employment market is pretty strong still. So I'd say it's a hold.
All right, absolutely perfect hold for a dividend.
Yep.
Now QBE. It's up. We're up.
Another great looking chart.
Well, we're up on the trade quite nicely, right? So it's a good move. And listen, we're sort of by that chart actually, sir. But But if you're up 20%, what it can do, QBE, and I think this is important when you're trading certain stocks. You look at how historically it's moved before, and it can have its big moves, and it can just flirt down a little bit. So there's no harm whatsoever taking a profit. I think this does flirt down and play down with 14, and maybe we can just go buy it again sometime in the next few months, Wolf.
Dave, 20% on a big story like QBE, you'll take it every day of the week, wouldn't you, on a 3-month period?
Yes, sir. I think you would, right? So I think an excellent I think trade that one, Wolfie. Very, very, very good, and I think again absolutely nailed. And Ausbis should like us. We put that one on the telly for them all. So
yeah, a couple of times, I think.
Couple of times.
Jesus. QBE. I mean, what are we doing?
I know. God, the biggest dog on the planet, right?
Well, dog is flying at the moment.
I know, definitely. So HPI came out with an announcement. Again, got a good dividend stock, Wolfie, and holding up really, really well. Yeah,
so if you're in this, definitely a hold. And I'm just looking just to see what the dividend right now is. 5.5. It's not bad if you've got this in your portfolio. You certainly wouldn't say no.
I would actually say as well, Wolf. I mean, we had the Roaring 20s. Are we going to have the Roaring 20s again 100 years later? We had the same thing like really is we had the Spanish flu, we had the Roaring Twenties, we've had COVID. Everybody wants to party. You can't get on aeroplanes. I was thinking of taking my family to Europe. That's not happening with the cost of flights. It's crazy out there, right? So, everybody wants to party. Everybody wants to travel. You think companies like HPI would do quite well.
Yeah, so you go to the local pub. Absolutely, Dave. I think it's absolutely true. I think what you're saying is definitely right there. And look, I said, right now in this market, you see how things are going. Even though, like, okay, what RBA is trying to do is slow down the growth, but I don't think it will stop people going out and have a quick drink right at your local pub. So I think that's probably still a very good thesis to be in. So yeah, definitely a hold here.
There is nothing in the world that will stop Australians drinking and having a good time, right? Even
Pandemic or not, World War III or not.
Even if we don't have lunch that day, sorry, darling, we're not having lunch, but we're drinking tonight.
Yes, exactly.
Absolutely fine. So, but again, a good little dividend play, Wolf. I'm surprised this isn't in your dividend portfolio. No,
look, I've got about 14 stocks in there already. So it's building, and I'm looking at SUL at the moment because we talked about it a couple of days ago. So,
disclaimer: I told my brother to buy that yesterday. By the way,
did you SUL?
Yeah.
Okay.
Well, I just thought 9% is pretty good, right? It's going to be volatile, but
I'll tell you what, all you saw is ching ching, dollar signs in your eyes.
All right. Okay. Right. IAG. I don't know why I'm talking about that. I think we're looking at QBE, but it's
Let's have a look. I mean, because it is a rival, and remember it had that's not a great announcement to do with New Zealand, where it's going to get hit, margin's going to hit. But you know what? It's fighting back, and like I said, it should do much better than it is. So maybe this is a laggard to QBE, and eventually will probably catch up, get back to that 5 over 5, and start trending again.
WiseTech buying a business.
Yeah, well, they're probably seeing that we haven't made an acquisition since last week. We got to get something.
Oh, good on WiseTech. Love him. You've got to give it to the management. The guy's got something about him, right? So
yes, I wonder what they're going to do when they're going to run out of these business. Next, probably Target. Or let's go for Amazon.
No, they can't. We're buying Amazon. They have to wait. SRG.
Yes.
So obviously nice trend. They've done a capital raise. What price do they do that?
72 cents, Dave. So
excellent.
Yeah, very good price. I mean, look, it's trending up there. So they've got that price, a very high price. I mean, almost a high price of the week. Which is good.
Big tick for the company. All right. On that note, listen, thank you very much, Wolfie. We're going to trade SDF and we're going to take profits on QB and HPI. What a great, a nice dividend if you want to have a look at it.
Yeah, and hold PPE as a dividend play as well on the back of the thing. PWH, we're watching this very closely to see how it goes. $10 is, for a trader, you're looking at an exit point if it goes below 10. Dave, ask the analyst today as well. Please, you got to join us for that. We have to talk about certain stocks because there's been a lot of information overload this week with results coming out, and see how we go for next week. So please join us then.
All right. Thanks, Wolfie. Thank you very much. Bye-bye.
See ya. Bye.